Let's continue this conversation forward with Sandip Agarwal of Sowilo Investment Managers, who's joining in. Sandip, good morning. Thank you for taking out time. The one factor, the currency weakness, has been one of the biggest reasons why these IT names have moved up 10-12% in the last two sessions. The question that first comes to mind is, for how long can these names keep piggybacking on the currency weakness? Because the currency was weak in the fourth quarter as well, yet it did not reflect any significant margin benefits in the previous quarter. Do you believe that this recovery that you are seeing, because you can't call it a rally considering the sell-off that you have seen, is going to be short-lived, or do you believe that, okay, the valuations are cheaper, so you may want to buy into this?
Hi, thanks for having me on the show. So, there are three things which are working together. So, as rightly highlighted by Rima earlier, there is obviously a currency benefit which cannot be denied, and the number could be 15 to 25 basis point per 1% depreciation. So, we are looking at 125 basis point of margin improvement just quarter on quarter, which is between 5 to 15% EPS jump depending on what is the percent operating margin of each of these companies. So that is one part. Second part, which is I think very, very fundamental, and if you recall 15 months back, since then I was expecting a 40-50% correction in the index level and a sharper correction in some of the names. I have been positive for last 1 month, and we have openly said that we are very constructive on the sector now, and I continue my stance. And I will tell you the most fundamental reason to be constructive is that, all this AI trade and this thing, you have to go and see the context. You see the data of last 25 years. The hardware cycle has started after 2002. So we have 22, 23 years of hardware cycle, which was very muted, low growth or negative growth. And now because of AI, the GPU demand and other RAM demand, memory demand, all of these things have suddenly, led to very sharp spike in hardware replacement, new hardware purchase. And that is the reason some of the front runner of the hardware companies like the NVIDIAs and others have done well. I think the second will be, the distributors who will build on these capabilities and will be able to distribute. And that is the reason you see this Microsoft and other players doing well, GenAI and others. I think the third in the chain is always the service providers like us, which are outsourcers, which are basically doing work for the distributors of the technology to the enterprise and to the retail, which in most of the FAN companies do participate, and also there is Grok and there is GenAI and few other names. So I think, our benefit always comes at the last, and I think we are at the beginning of that cycle where we will start getting benefit. Now, I'm not saying that we will see a 15-20% growth at the industry level or all that, but I think that the last 2-3 years, which have been very muted, I think the next 2-3 years will be more exciting and better. I think that at industry level, we should see 6-7% growth, and depending on each company, the growth could be little up or little below that. But there will be a growth which will come back after 2-3 years. Add to that the currency benefit, and add to that 40-50% correction in the valuation. So all these three things put together, if you do the maths, you will feel that the stocks are actually 70-80% lower than what they would have been if these things would not have happened. So from that perspective, it is very, very good level to buy in my view.
All right, good level to buy, Sandeep. So just a two-part question here. One, what should you buy? What would your, pecking order be here in the large cap and the mid cap names? And secondly, you said that there is growth which is likely, but there is also valuation derating which has happened. Could you expect valuation re-rating to happen? If yes, how much would the multiples increase by?
So, I don't think anyone is willing to give a valuation re-rating today, because everyone is worried about the uncertain future, how AI will disrupt. While we have a very clear view that, and this is from beginning, that AI is disruptive, it will cut down 20-30% effort spread over 4-5 years of the contract period. So 4-5% deflation every year. Now, if you are able to do 6-7% net growth after that deflation of 4-5%, which I think Indian IT companies will be able to do, it is a great number, to be honest. And I don't think anyone is going to re-rate the sector in terms of multiple, but definitely there will be a lot of earnings surprise, because most of the people have written down the sector as zero growth or negative growth. From that perspective, 6-7% growth in dollar and then currency benefit. I think next 3 years, the PAT number, whatever we have today, it should be broadly 75% higher than that. Now, for 75% higher PAT, even if you don't get any benefit of rupee, then also, any benefit of re-rating, I think, the stocks can move up 75% in next 3 years. That is the way I look at it, which is a very good return from a mature sector and a good cash generating sector, good corporate governance, and all those perspectives. So I think good money will be made in next 2 to 3 years. Now that if that 60-70% return happens in 6 months, then this call is gone. But if it happens, the maximum time it should take is 2 to 3 years. Generally, market is very smart. They always upfront all the benefits. So I don't know when you will get that return, but I think that the time ahead will be very, very positive and good.
Mention stocks. The stocks.
Well, stocks is very hard. We run a PMS, so I won't be able to. But I will give you an idea. We will not. I am still not positive on the ER&D companies because I think they are insanely expensive. So I am positive on the large caps. I am positive on the mid caps in the IT services, the traditional services space. Some of the names have corrected very, very meaningfully, so they should do phenomenally well. The ER&D companies, I think that multiple challenges. One, they are very, very expensive. Second, they are also dependent a lot on the auto cycle. So I will avoid them because the chances of disappointment there is very high. So the ER&D and that space, product engineering space, I will be a little cautious. The traditional, the sector which is not liked by anyone, the traditional IT services, I will be very, very positive. I look forward to that. And also I look very positively on the distribution companies because I think the shortage of all the memories and everything, they will lead to huge benefit going forward. Not immediately. Immediately there could be some negative, but in next 1 or 2 years, they will generate huge wealth. That is the way I will look at it.
Got it, Sandip. We're out of time, so we'll have to bid goodbye. Thanks very much for your time here, and we hope to have you back again sometime in future. On that note, we'll slip into a break, but when